How often do people ask me to be louder? That's rare.
It is 7:08. I'd like to call the Government Operations Committee to order. Can I please have a roll call?
Lancioni.
Yes.
Gem.
Yes.
Petrilla.
Here.
Wirbal.
Here.
Bessner.
Here.
Sokaitis.
Here.
Folks.
Here.
Bongard.
Here.
Munns.
Here.
Weber.
Here. Thank you very much. Let's see. First up, we just information only. We have item 3A. Once again, this video gaming statistic information only. I am looking for a motion and a second for the omnibus for item 5A.
So move.
Moved by Wirbal, seconded by Petrilla. Roll call, please.
Lancioni.
Yes.
Gem.
Yes.
Petrilla.
Yes.
Wirbal.
Yes.
Bessner.
Yes.
Sokaitis.
Yes.
Folks.
Yes.
Bongard.
Yes.
Munns.
Yes.
Okay, that motion carries. Next up is item 5B. I believe we have Eric Crichton is going to make a presentation.
Good evening, everyone. Okay. So a couple months ago, I stood before you and we had an informative session on the GIS, and we touched on the GIS utility network at that moment, and that's what tonight's resolution is. So let's talk about why the GIS utility network is important for the city of St. Charles. Data standardization. So 15 to 20 years ago, we created the database standards for our utility data sets here at the city and have maintained them ever since. That was for a collection process. At this point, that database is kind of old, and we are looking at a point now where the data is mature enough that we can migrate it into something that is more useful and more analytical for the data, and that is Esri's utility network. It has a great amount of increased functionality, and not to mention an industry standard database, not only for databases itself, but for each individual utility. It uses industry standard so that the database can be designed more proficiently. More importantly, we're looking at an end-of-life scenario as well for the current network system that we utilize. The Esri platform is moving to the ArcGIS Pro platform, and our current system is not compatible in that. So we're looking at an end-of-life as well. This new system will extend editing to web and mobile environments, so it takes non-technical end users and gives them the ability to edit our production data in a web setting or in a mobile setting via an application. It gives us the ability to put rule-based editing for data integrity on the data. So, for instance, if somebody wants to add a water hydrant into the system, they would have a rule that says they can't add a water hydrant unless they add the associated water main and the valve and the T connection to the water main with that. So the entire assembly has to come along, and we create a process where that's done in 2 clicks, making it much more efficient for editors to go about their day once they've done that. And the utility model also organizes things in different levels. So if you think of like a water system, you've got high pressure and low pressure. Electricity, you've got different circuits coming from different substations. Sanitary, stormwater have different basins. We can take that data, and at a moment's notice, we can return reports on them, in which, at this point, it's something that the public works staff relies on GIS to provide those reports, and now they'll have them at a moment's notice where they can pull up stuff. Like in this a circuit where it brings the length, the customers on it, the transformers, the total amperage, all of that stuff is at the fingertips of our end users in the new system. It also models complex assets such as substations, lift stations, water wells, down to a more detailed, refined point than our current system does. And it also sets up for integration. So, future asset management or solutions for outage management or inspection are able to flow naturally from this new database standard. Talk about a little bit about the increased functionality, specifically tracing of the data in each network. On the screen here, you'll see a case of water isolation trace. So a user will put down a spot for a main break, which is the green dot on that picture. They'll be able to return customer information immediately, as well as look at the exact valves that are needed to operate to isolate that incident so that it doesn't flow to the rest of the system. Electric customer outage, same thing. You can see the green dot down in the bottom here. You're able to place that on an area or on a customer itself and trace upstream to find out where the possible outage protective devices may occur, so which ones may have faltered to cause that outage. And stormwater is kind of the same thing. We can put a green dot down in an area that's flooding, trace upstream and see where the possible origins of those flooding sources would occur. All the way up to like a retention pond, which is associated to the underground structure network in the utility network, which is a function we don't have at this point. So this was budgeted as a collaborative effort to keep costs down for the city, meaning that we'll be sharing tasks with the vendor that we selected to make that a more cost-effective solution. The RFP started in February of this year. We got 5 responses to it. 2 of them were shortlisted for evaluation from the team. And with that, we chose Timmons Group, who was the lowest cost proposal. They're an ESRI certified water utility network partner. They've got 20 years of GIS experience and multiple migrations already to the utility network. Additionally, they're also an engineering firm. That is their core business. So not only will they be able to help with our needs as a GIS staff, but they'll also be helping Public Works with their staff so that they set us up for the future. This project phase, the migration itself, is a 3-pronged approach. We've got water, stormwater, sanitary, and electric. So in this first initial phase, we will be moving to migrate water, stormwater, sanitary for data readiness to migrate, and then data modeling, and then a water system migration completely in this first phase, followed by a second phase of sanitary and stormwater migration, and then a third phase, which is all the components of the electric. So with that, are there any questions about the UN or the RFP process?
Any questions? Go ahead, Ryan.
Eric, is the data that you're capturing tied to specific user, or is it by address?
Well, it's the actual location. So, each utility has the exact location of every piece of infrastructure in the network. But the end users, the metering and stuff that we consume from that and from our utility billing system is tied to each individual.
So it's the address.
Yeah.
So just like you could run a data comp for some of these things because you guys hold on to the data, say from 10 years ago before I lived in my house, and you could compare it to what those usage levels were, but I wasn't there because it's tied to the address, not the user.
Yeah, exactly.
Okay.
Go ahead, David.
You mentioned phase 1. So part of the task includes discovery sessions. Just how long do you think that will last actually with with your team, Public Works? Months, or just curious?
Well, I mean, the data standard, I guess there's a process here that's going to be the standard database is already set. But we will have to have discovery with Public Works and GIS staff to discuss what we need to customize it for the city and make sure that it's meeting all of our needs and add to that data model.
You don't think that'll take not too terribly long? I'm just curious.
Okay. Especially for doing each utility at a time.
Thank you.
Eric, is there an expected completion date for phase one, and then when does phase two and phase three happen?
We're looking at a calendar year. So if we were to start, at the end of this year, we would be looking to complete that phase one in 1 year, phase two in the second year, and then phase three.
Okay. Any other questions? No? Looking for a motion?
Move for approval. Second.
Moved by Wirball, seconded by Petrillo. Roll call vote, please.
Montioni?
Yes.
Gem?
Yes.
Petrilla?
Yes.
Wirball?
Yes.
Bessner?
Yes.
Kulkaitis?
Yes.
Folks?
Yes.
Bongard?
Yes.
Munns?
Yes.
Motion carries. Thank you, Eric.
All right, appreciate your time. Thank you.
Yep. Next up, we have item 6A, Finance Department. Bill, Hannah, and Jim Savio, I believe, are going to make a presentation.
Thank you. At this time, first off, I want to introduce Jim Savio from Sikich. He is going to walk through the audit process that the city went through this past year and discuss the various reports that have been distributed to the committee and the council last week.
Great, thank you, Bill. Thanks, everyone, for your time tonight. Really do appreciate it. I want to thank, too, Bill, Colleen, Jill, and the entire staff for all of their assistance throughout the audit process. Went smoothly again this year. They were 100% ready for us on day one, so able to get our field work done on the time allotted, get the reports out on time. So I want to thank them for that. I'll start real quick just to talk about the audit itself and the timeline. We typically have a planning meeting with finance just to kind of go over the year, what changed, debt issuances throughout the year, and intergovernmental agreements, things like that. We had that on March 22nd. And then after that, we had preliminary field work May 30th to June 2nd. And that's typically where we evaluate internal controls. We do walkthroughs, do our risk assessment, and then we also do our fraud risk questionnaires and interviews at that time, too. So final field work was July 17th to August 4th. That's where we do all of our substantive testing. The bulk of the audit is done at that particular point. We had an extra conference on the last day, on August 4th, issued draft reports on August 31st, and then final reports on September 22nd, except for the single audit report and then the in relation to opinion on the consolidated year-end financial report, which is required by the Illinois Grant Accountability and Transparency Act. We're waiting on an allocation between state and federal funds for the very last disbursement made in FY23. So we have to know what part is state, what part's federal before we can get in relation to opinion on the schedule of expenditure of federal awards and then the consolidated year-end financial report. So still waiting on that information, but all of the rest of the reports were issued. What I'd like to do is start, and what I'm going to do is go over basically the reports we issue and are responsible for. Bill's going to do some of the analysis on the actual numbers in the annual comprehensive financial report, so I don't want to steal any of his thunder. So I'll focus on the reports we issue and are responsible for. So for the annual comprehensive financial report, I'm going to start with the independent auditor's report, which is on page 1. And you may remember last year we did implement some new auditing standards, and one of the things that changed was the opinions are now the very first section of the report. So you can see on page 1 are the two opinions paragraphs, and the second paragraph basically states that we gave, again this year, an unmodified opinion, which is the highest level of assurance that we can provide to the city. You'll notice, too, that third paragraph, we did have a change in accounting principle. We implemented GASB Statement 87 related to leases. So now you record leases both on the lessee and the lessor side, where as opposed to previously, that was never recorded on the balance sheet. So that changed things a little bit. It didn't have a huge financial statement impact. On the lessee side, there were no material leases to record. And then on the lessor side, there was leases receivable and a related deferred inflow of around $700,000 at the end of the year. So it didn't have a huge financial impact on the city. And then on page 3 and 4 of the independent auditor's report, I'll go through the other matters section, and this basically states what we did with the other information in the annual comprehensive financial report. So we give an opinion on the basic financial statements, and then the required supplementary information, which is management discussion and analysis, and then the required supplementary information listed in the table of contents. We do some limited procedures, some inquiry, make sure it's consistent with the basic financial statements, but not enough to give an opinion on that information. Now, the supplementary information is the combining an individual fund financial statements and schedules, and we give what we call an in relation to opinion on this information. So it's fairly stated in relation to the basic financial statements that we audited. And the last thing is the other information on page 4. Now, other information is the introductory and statistical information. That information we don't give an opinion on, but we do read the information to make sure it's materially consistent with the basic financial statements or not otherwise materially misstated. And if it were, we would communicate that to you. So there were no material inconsistencies or anything that was materially misstated. And then because you have to have a single audit each year because you expend more than $750,000 in federal funds, you are required to have what we call a yellow book audit, but it's an audit in accordance with government auditing standards. That starts on page 5. So this is basically a report on internal control as well as on compliance. And you can see on page 5, the very last paragraph, we basically state that we noted no material weaknesses during our audit. And then as far as compliance goes, the report on compliance is on the top of page 6, and we had no instances of non-compliance noted. So another clean report there. Last thing I'll talk about in the annual comprehensive financial report is management discussion and analysis. I point this out each year, but Bill prepares this great overview of the city's financial position and changes in financial position. It'll point out any significant changes or trends that might be occurring in the financial data. Has some 2-year comparative data that you can't find elsewhere in the report, so highly encourage you to read the MD&A if you read anything in the annual comprehensive financial report. So that is all I had on the annual comprehensive financial report. I'll talk about the auditor's communication to the mayor and members of the city council and management. That's the smaller report. And I'll start with the table of contents. So there is some required communication that we have to have with city council each year. That's required by auditing standards. That's on pages 2 through 4. So we did communicate that we implemented GASB Statement 87 for leases, but otherwise, pretty routine communication this year. Like I said, we had no delays in the audit, no disagreements with management, so fairly straightforward information on pages 2 through 4. Now, we are required to communicate to you any audit adjusting journal entries we found. So these are entries that we found as part of the audit. We didn't have any audit adjustments, so everything was fully adjusted. And we had one past adjustment. What this is basically an adjustment that was deemed to be immaterial, but above a certain floor, we have to communicate that to the council. So we did have one adjustment on page 5 related to capital assets and a change basically in how you account for capital assets in the electric fund. And then finally, we have a communication of deficiencies in internal control and other comments to management on pages 6 through 12. And if you go to page 7, if I can get there. So I noted we didn't have any material weaknesses in the Yellow Book opinion. We also had no significant deficiencies or no new deficiencies this year. So this on page 7 basically states that we didn't have any new deficiencies. And then what we carried forward is in Appendix A. So there's 2 comments that we carried forward related to capital asset records and then the build versus pumped ratio for water. So those carry forward, and then there's some management responses to those comments as well. So we did issue a couple other reports that I just want you to be aware of. We issued a management letter which basically states in writing again that there were no material weaknesses. We issued 6 TIP reports, basically unmodified opinions that you complied with Public Act 85-1142. And then we also had a report on the 2016 revenue bond report, basically stating you're in compliance with the bond ordinance related to that issuance. So that is all I have on those reports, but I'd be happy to answer any questions that the council might have.
Any questions for Jim? Seeing none? Thank you very much.
Great, yep. Thanks again for your time.
Thank you. I know as part of that action item, there was a recommendation to accept the reports. I don't know, Chair, if you want to do that now or you want me to go through the presentation first, I'd be happy to do that too.
No, I think we can go ahead and accept the reports. Can I have a motion and a second?
So moved.
So moved by Lencioni, seconded by Gem. Roll call, please.
Lencioni?
Yes.
Gem?
Yes.
Petrilla?
Yes. Yes.
Wirball?
Yes.
Bessner?
Yes.
Kulkakis?
Yes.
Folks?
Yes.
Bongard?
Yes.
Munn?
Yes.
Motion carries. Thank you very much. Thank you, Bill.
Okay, as the second part of tonight's discussion on the city's year-end financial statements, we thought it would be possibly helpful and useful to put forward a short presentation on some of the highlights and some of the trends. Most of this information is contained in the ACFR, but obviously that's a 200-page plus document, so there's a lot of information in there. So I'm going to run through, I think, what are some of the highlights of it, and if you have any questions along the way or discussion items, please let me know. So Jim started to walk through our ACFR document, and these are the major sections of the report. For some that may not be familiar with it, we have the introductory section, which contains a list of officials, our organization chart, GFOA award on the ACFR from the prior year, and our letter of transmittal. The financial section contains the independent auditor's report that Jim went through, and then we have collectively what's known as our general purpose external financial statements. This contains the MD&A analysis, which is 18 pages of required analysis that we need to do as part of this process. And then the next part of that is the basic financial statements. So the basic financial statements include several sections, different funds and fund types, as well as the notes to the financial statements. There's a section called RSI, and then another section with combining individual fund statements, and then our stats section. The stats section has a lot of 10-year trend information in the back, so it's really useful if you want to get some additional information on the city demographics and other financial information. Just one quick note, we are planning to produce a popular annual financial report, which is a summary of this information. We hope to have that done in the next couple months and have that for distribution.
Bill,
yes?
have we ever had a popular annual financial report before?
Yes, we did it last year, and we did it for a couple of years. Prior to that, we had a one-year gap during COVID and some staff vacancies that we didn't do it. So I believe it's on our website right now, the ones that we've done. The first slide is the basic financial statements. This is the city's statement of net position. So this information is summarized, but the full information is on pages 7 and 8. This is basically the balance sheet for the city, and this takes into account all the capital assets, long-term debt, and net pension liabilities. This is using the full accrual basis of accounting, similar to private sector. So you're going to see depreciation, you're going to see capital assets, long-term economic resources measurement focus, as opposed to that short-term budgetary focus. But that's overall, it's broken down into governmental activities, our business type activities, which is our utilities, water, sewer, electric, refuse, and then the entire primary government of the city combined. And if you walk, you can see the various components of that. We have capital assets of just under $400 million reported at the end of the year, liabilities of $270 million, and down here you get to our total net position for both business type and governmental type activities. One thing I want to point out is that we have a negative unrestricted net position for governmental activities. That's due to the recording of our net pension liabilities on the city's financial statements, which we were required to start doing back in 2016. The next slide is a statement of activities. This is essentially the income statement for the entire city. Again, this is done on a full accrual basis, taking into account depreciation as expense, and this is on pages 9, 10. Again, long-term focus, but different from the modified accrual budgetary basis. So this is grouped again by government activities, business type activities, and our primary governments. During the year, we had revenues of $156 million and expenses of $136 million. The components of function, electric, public safety, and public works are primary components of expenses, and charges for services is our largest revenue, obviously with the utilities that we have, electric, water, and sewer, followed by sales taxes and property taxes. Next thing we want to do is kind of walk through the basic financial statements in terms of governmental funds. So this presentation lists our general fund and all our other governmental funds combined. And as a reminder, our governmental funds include special revenue funds, debt service funds, and capital projects funds. And this is done what's known as a modified accrual basis of accounting. So this is similar to how we budget, very more cash-based focused with a 60 to 90-day accrual for payables and receivables. So just a couple highlights on here. You can see on the general fund side, total sales taxes increased to $26.4 million. That's an increase of about $2.5 million over the prior year. That's all sales taxes, home rule, regular use taxes, and cannabis taxes. Our state shared income taxes increased to $5.3 million, over $4.75 million in the prior year. Again, that was some outlier one-time revenues associated with that increase. Our hotel and alcohol taxes continue to increase from their 2021 lows, and our motor fuel tax revenues received in the MFT fund were similar to the prior year. We also had a big increase in investment income over the year partly due to more active investing, but also due to the significant increase in interest rates over the past year. So total revenues for the general fund were $58 million. Non-major governmental funds, $6.3 million, for a total of $64 million revenues for governmental funds. On the expense side, we had $44 million in expenses for the general fund and $15 million for other governmental funds. On the general fund side, one thing I want to point out is that we had transfers of $3.3 million into the general fund during the year. That was due to the closeout of the city's health insurance fund. That resulted in a $2.4 million transfer back to the general fund since we were consolidating that fund because of how we changed how we were accounting for health insurance expenses for employees. We also had a transfer back for less than $1 million related to a developer reimbursement, and that resulted in the $3.3 million transfer back to the general fund. We had a $1.7 million increase in general fund reserves fund balance over the year. That was very similar to last year's increase in fund balance. So the fund balance, the general fund went from $32 million to $33.6 million last year. I'll get into more specifics with the non-major governmental funds, but you can see all that other activity is listed in this column. One thing I want to point out is that we did have $15 million coming out of the general fund to either the capital projects fund or the debt service fund for various purposes, and I'll go over that in a little bit more detail. Just want to pause for a second. Any questions? Or all right. Last slide on the governmental funds combined presentation. This is the fund balances of the general fund and the non-major governmental funds. We had $27.4 million in unassigned reserves fund balance for the general fund at the end of the year, $3 million assigned for future debt service payments, and some other fund balance amounts based on advances to TIF funds and other purposes. Our unassigned fund balance at the end of the fiscal year was 46.1% of general fund expenditures and transfers out. So that meets our 25% policy. We had a negative $1.5 million deficit in our special revenue funds. That's essentially due to some negative fund balance in some of our TIF funds due to advances to and from those TIF funds and the general fund. So until enough TIF funds are accumulated to pay those advances, they'll report a negative deficit fund balance until that time. So we had 33 million in general fund balances, 19 million in non-major governmental funds for total fund balances of 53 million at the end of the year. So this is just a graphical depiction of the general fund, blue being revenues, red being expenses, and this line up here being expenses plus transfers out. So you can see over the last 5 years that line has closely followed revenues, which is the purpose. We're transferring out resources when we can for future capital projects and for future upcoming debt service payments as well. And this chart is our unassigned fund balance for the general fund. As you can see, the increases over the last 4 years, and that reserve amount being at 46.1% of expenditures and transfers out. This groups our non-major governmental funds, that one column you saw, into the 3 different fund types. We have special revenue funds, debt service funds, and capital projects funds. Our special revenue funds have property taxes of 2.7 million. That's due to TIF increment received during the year. Our MFT revenues of 1.3 million in the MFT fund, and expenses of 3.6 million during the year. Our debt service funds had 8.9 million in principal and interest payments made during the year. And you can see those principal and interest payments were funded by roughly $8 million of transfers from the general fund and other funds to make those debt payments. Our capital projects fund, we have 4 capital projects funds that we'll cover in the next slide, but you can see we had revenues of $724,000 during the year, expenses of $2.7 million, transfers in of $9 million, and net change in fund balances of $7 million for all of our capital projects funds. And these are our 4 capital project funds listed. Our main capital projects fund had revenues of $669,000. Of that amount, $350,000 up there was related to our video gaming tax revenues. We had capital outlay of $1.8 million, transfers in of $4.8 million, so we had an increase in fund balance of $3.1 million for our capital projects fund, and we ended the year with $9.3 million in reserves fund balance for our capital projects fund. So we've done some work over the last couple of years trying to set aside money for future capital projects, and this is kind of where we're at with that process, with a reserve of $9.3 million sitting in that fund. We have a couple minor funds here, and then obviously our First Street Plaza Fund. We had funds transferred over there of $3.8 million, and we fully expect the fund balance of $3.8 million to be expended in the current year, and that'll be down to 0 at the end of the current year. And again, I've listed page numbers where all this information is available if you want to look at it further. We received our tentative EAV, estimated EAV from Kane County last week, so we thought we would include this slide for tonight. We always include 10 years of EAV history in the statistical section of our ACFR. So this is a breakdown of residential, commercial, and industrial EAV over the last 10 years. Typically, the increases in our EAV have been 2 to 5% for the last 7 years. The estimate that we got from the county was an increase of 10%. We estimate that to probably decrease a little bit, but that makes sense when you consider the property sales values over the last 3 years and how that works its way into the EAV calculations. Roughly 13.9% of that 10.1% increase was due to an increase in residential EAV. So the residential EAV increased a lot more than commercial or industrial based on this estimate from Kane County. So as of now, we're looking at an EAV increase of about 10% to $1.86 billion, which would be roughly $5.6 billion in estimated actual value of taxable property in the city. So one of the things we wanted to do is sort of put some trend indicators up here of some aspects that I know we've had some conversations about in the past. This slide relates to the city's outstanding general obligation debt and IEP loans. You can see the outstanding GO debt in the first line there. We peaked about 108 million last year. We didn't issue any new bonds, so we're down to 101 million, and we estimate that we'll be down to 94 million at the end of the current year, as the city doesn't have any plans to issue any GO debt in this current fiscal year. On the IEP loan side, we have committed to a lot of capital projects that are ongoing as far as water and sewer, so we are going to see the outstanding amounts of those balances increase over the next several years, with the hope that we'll level off at some point as some of these big projects get completed and we're able to identify other revenue sources for those projects. But again, these green and red arrows kind of indicating generally where the direction is heading as far as what we would like to see, kind of just a general visual of kind of what's going on with that. The total outstanding general obligation debt IEP loans is estimated to be about 165 million at the end of the current year. And then we've got some indicators as far as those amounts on a per capita basis and an EAB basis. We're still going to see the per capita amount increase probably over the next couple of years, but hopefully that will level off and we can kind of reverse that down to a more typical level over time. The last three indicators here, this is our net revenue coverage for annual debt service payments related to our three utilities for electric, water, and sewer. Ideally, we want these to be at least 1.0 or higher. On the electric side, we're very strong position in the electric fund. However, on the water and sewer, we're having some difficulty getting to that point for both of those. Given the number of capital projects being funded currently with IEP loans and those amounts increasing and the annual debt service payments increasing, we're probably not going to hit those 1.0 ratios for a couple of years, but it is one of the things that we're monitoring, and hopefully we'll get there at some point. These amounts don't include the 1.8 million remaining in general obligation revenue, not general obligation, but revenue bonds related to Costco. The final payment on those bonds is January 1st, 2025. This is just a graphical representation of that information, blue being outstanding GO debt, the orange being IEP loans, and the yellow line being the totals, and kind of how that's been trending over the last 5 years. And on this side, same thing, we've got our couple ratios, total debt per capita, and our total debt per EAB, and what that looks from a graphical standpoint. I wanted to touch on pension liabilities. Every year, the city conducts an actuarial evaluation of its police and fire pension funds. That valuation results in a lot of indicators used to determine what the city's contribution is going to be to those funds in the upcoming fiscal year. So some of those numbers include the total pension liability, fire, the market value of what the assets are in the fund, what the percent funded is based on those ratios. And you can see it's been trending down because asset returns have not been as meeting expectations as hoped, and what that net pension liability is for the fire pension fund. The actuarial valuation percentage is one measure that actually smooths things out a little bit more. So it's 69% funded on an actuarial basis. And the valuation that we just had as of April 30th, 2023 will be an increase of the city's actuarially determined contributions that are required to just under $3 million at $2.98 million. This is the investment rates of return that the fire pension fund has realized over the years, 5.3, negative 3.1, and so on. The investment assumption for that fund is 6.75. So this is a graphical, again, representation of the fire pension net pension liability and the planned net position as a percentage of the total liability. And over here we have the actuarially determined contributions and what the actuarial funded basis is on the fire pension side. So these are the same indicators for police. We've got the total pension liability of 92 million, market value of assets of 45 million, and the police pension plan fiduciary net position as a percentage of the TPL, trending down the last couple of years at 48%. The net pension liability is 47 million, and the funded percentage, 52% on an actuarial basis. and we are looking at increase in contributions from 4.1 million to 4.4 million this upcoming levy. And again, those same indicators represented before. As with fire, we have our net pension liability amounts and the percentage of the TPL and the actuarial contributions required by the city. We don't have any slides on IMRF. IMRF did have a net pension asset last year, so there were about 108% funded. That's changed a little bit over the last year. Now I believe it's 92% funded, with a net pension liability of about 12 million. So full disclosure, I didn't want to exclude them, but I just want to mention that as well. So this is a summary of our proprietary funds. Again, we're back to that full accrual measurement focus. And this has our operating revenues on electric, water, and sewer, 61 million for electric, 8.6 million for water, 11.7 million for sewer in the prior year. We're also showing our internal service funds in total. Those are our liability insurance, inventory, vehicle replacement, and communications. Again, full accrual basis, so we're showing depreciation expense, not capital outlay. And we had a positive operating income for all three utilities, positive net income, and a positive change in net position. The net position shown here at the end of the year includes the investment in capital assets, so a better measure to look at, it would be the unrestricted net position. It's closer to reserve fund balance. So you can see what that amount is for each of those funds at the end of the year. And the last page in the basic financial statements is our fiduciary funds. This includes our pension trust funds, which had total assets combined of 94 million. And it also lists out our custodial funds, where we're essentially caretakers for. And you can see those amounts here. TCA, an SSA bond fund, and it's the North Central Narcotics Task Force. So just to recap, overall, the city's long-term financial position improved over the last year. This was the second consecutive year we had strong growth in sales taxes and other consumption-based taxes. There is some indication that that's been leveling off, as we'd expected. Our general fund reserve increased 1.7 million, so we've been able to maintain a 46.1% ratio general fund fund balance. Our actuarially determined contributions to both police and fire are planned to continue increasing, calculated to be about 7.45 million, or 50% of the upcoming 23 tax levy. We have been able to allocate funds for future capital projects, and so we have that 9 million reserve in the capital fund. But we don't anticipate seeing a lot of one-time revenues or closing of funds and have these big one-time revenue sources going forward. We're going to be more in a static state with some of those things. We do have a significant number of capital projects related to water and sewer that will need to be continued, funded primarily with the IEP loans if possible. Our annual debt service payments is about 20 to 30% of operating revenues. That's probably going to slightly increase as we go forward. So it just makes it challenging to make sure we're funding personnel services and contractual services and other items in those utilities. And again, we've made some progress reducing outstanding bonded debt, but we do anticipate those IEP loan amounts to continue to increase. So that was a lot. I tried to keep it as high level as I could. Happy to take any questions or discussion. Yes.
Go ahead, Paul.
Remind me, we have increasing requirements for pension funding levels coming up. Isn't that correct?
We have a city policy. 2040 is the state requirement for funding, and the city's policy is funding at 100%.
Okay, and we're currently funded between police and fire, or would that roll in the IMRF funds as well?
IMRF is handled a little bit differently.
Right, so police and fire.
Police and fire is the one with those sort of deadline dates out there.
Okay, so 2040, and we're between the two of them at about 50% right now.
Depending on which number you're looking at, sure.
Somewhere
50,
around
55,
there.
yeah.
what's the time frame in figuring out a path to get to the 2040 number?
So I think some of the things we've been doing is making sure we're using realistic assumptions with those valuations. We're using 6.75% as our assumed investment rate of return, which is lower than some other places use, and it's lower than than what the numbers are for the consolidated investment funds. So that's using realistic assumptions is, I think, part of the challenge as far as payroll growth and making sure we're not getting behind by having unrealistic assumptions related to mortality tables, salary increases, and those types of things.
So follow-up, do you believe that we need a plan to make sure that we get to that funding level?
Yeah, we've had some conversations internally about things we can do. We've talked about making additional contributions to the police and fire systems as a possibility over and above what we're required to do. So that's one thing that's on the table as an option.
Okay. Do you believe that we are on track to meet those requirements in 2040? I mean, that's a while off, but, now is the time for planning.
I think we'll get there. It's 17 years away, but we got some work to do.
Thank you.
Go ahead, Ryan.
I would like to just start by saying these meetings continue to get more and more helpful, better and better, especially as somebody who covered these meetings before he was sitting on council, and now, I don't know how many years we've been up here, 2 or 3, these continue to get better and better. So I, for one, really appreciate that, and I'm sure there's other people up here as well. Just one, so for the GO debt and the IEPA loans projected at 165 for 220 in 2024, best guess when you think that number starts to shift and those loans start coming down. I know we have infrastructure, I know we have that, but aside from pensions, which are difficult, looking at your GO debt, looking at your IEPA, realistically, if you had to look at a calendar, when do you think that number starts to turn down?
I think the total number, if my math is correct, will probably start turning down in about 2 years.
Without going into a rabbit hole, I mean, that continues to be the number that we have to do it. It's so important, we have this, but at what point can you start to get ahead of that number to start bringing that debt down, knowing you have infrastructure with a city like ours, the projects that have to be done that, may have been put on the shelf in previous years, we're paying for it now, we have to do that, but at some point, when do we start to turn that corner? So that's a number that's still important.
I just want to jump in real quick, too, because I know that one of the things that Bill and I have been discussing is getting that GO debt down, which it is trending in that negative direction. But one of the things we can't always control is some of those mandates, especially on the infrastructure side, lead service lines being one of them. So as much as we can control trying to pay off and build up our capital reserves in order to fund some of those projects, something like a lead service line replacement that's, to the tune of $100 million, we're just not going to be able to fund without some of that assistance. So I like to separate the IEPA loans out from that discussion just because those are typically low interest. Sometimes we've got some principal forgiveness on them and focus on that GO debt, which we sometimes have a little bit more control over what we're issuing.
I think and I know a conversation between you and I, but I think for this body to understand, what decisions were made, 5 years ago, 10 years ago, 15, 20, in terms of infrastructure and looking at the debt that we had to take on and that we have to continue to manage to help with some of these things and just making sure that people have a good understanding of why that number is what it is and what we're doing to manage it, and that it's not just, we woke up and, we have $165 million we got to cover. So.
Go ahead, Paul.
I started with the topic I always bring up is because I'm always looking at the pension obligation that we have. But I do want to say I appreciate in your tenure the amount of fiscal conservatism I've seen out of the city. I appreciate that. I love seeing that we're bringing our general obligations borrowing down. So I love seeing that we're operating in the city. Operations are contained, and we're doing a better job of reporting those things. Obviously, in some of the other structured loans, the IEP, the state loans, I mean, that's all for improving our assets and things that we have to do. So I have to give you a ton of credit, and all of city staff, for the way that we're running the city. I think that we're being more conservative, and it shows in everything. Although we have a lot to cover, and there's plenty of challenges in the future, I do appreciate the job that you've been doing, and I think the information you're giving us is absolutely perfect. So thank you.
Go ahead, Brian.
Bill, thank you for your presentation. I just have 2 questions for you. So our Moody's bond rating for the city as of December 2021 is AA1. How often do we, or does Moody's reevaluate our rating?
So if we were going to market, issue new GO debt, we'd have a rating analysis assigned at that time. We haven't had to do that, so that is the last time we had a rating. Moody's just reevaluated and revamped all of their metrics. So we may come under what's called a surveillance review periodically every couple of years. We didn't have one last year. We'll see if we have one this upcoming year.
Okay, and then my next question is on in the annual comprehensive financial report on MDA 11, paragraph 3. It talks about our general fund reserves, and we're currently at 46.1%. Is that?
Could you say that again? I'm sorry.
Our general fund reserves, we're currently at 46.1%.
Correct.
And it says that our city has established a policy of maintaining a minimum of 25%. Could you just maybe explain why are we so high on that percentage?
Mm-hmm. Sure. I think, and this is across all municipalities, I think, some of the revenue, the rebound in revenues that we've experienced over the last couple of years has been greater than anticipated. That number was higher several years ago as well, and I think intentionally so, as a sort of a leverage against the outstanding debt and other liabilities that we had on the books. It makes our overall fiscal profile look a little bit better with that level of reserve.
Does it help with the ratings?
Yes.
Okay.
It was actually one of the most important metrics that they looked at the last time we had a rating in terms of, that overall picture, not just looking at one thing in isolation, but looking at all the different components, assets and liabilities.
So there's a benefit to keeping it that high, above the 25% threshold?
Yes.
Okay.
Yes.
Okay, thank you.
Yep.
Go ahead, Ron.
Thank you. Well, speaking of that, okay, we had 46.1%, which is good because our base is 25. What have you done, like a 5-year outlook to see at the way with our capital projects? How will that affect our reserves? Will we stay above that 25% or not?
So I think you asked about capital project funding, essentially, and reserves. So that's something we're starting to take a look at. We're just getting ready to start our budget process. Talking to Heather, we were going to have a little sort of workshop in a month to just talk about the budget process, talk about, what goes into it, and just have some discussion before we actually get into the weeds of it. So I think we might have some better answers to that question as we walk through that process.
But as a general rule, we will not go below that 25% threshold just because our policy dictates that. So it's important that we stay above that and really shoot for a little bit higher than that. But we will not recommend any projects that would take us below that 25% amount.
Thank you.
I think to follow up, that's one of the reasons why we're trying to target that capital reserve being at $9.3 billion right now, so that we have that flexibility to get certain things done based on the priorities of the city.
Thank you.
Any more questions for Bill? No, that was for information only, so I appreciate the presentation, Bill. Thank you.
Thank you.
Next up is public comment. Do we have any public comment tonight? I do not see any. Any additional items from the mayor, council, or staff? No, I do not see any. No need for executive session tonight. I'm going to ask for a motion and a second to adjourn.
So moved.
So moved by Wirball, seconded by Lencioni. All those in favor say aye.
Aye.
Those opposed say nay. The ayes have it. We are adjourned. Thank you.